Some see few signs of a bottom in U.S. shares, even after steep sell-off New York. Despite a crushing sell-off that pushed U.S. shares into a undergo market, buyers see few signs suggesting equities have hit backside, as continual issues over surging inflation and an aggressive Federal Reserve preserve to strain asset expenses. The marketplace's losses had been steep. The 21.3% year-to-date decline in the S&P 500 as of Monday wiped out a few $8.7 trillion in market value this 12 months, in keeping with S&P Dow Jones indices. Meanwhile, the best inflation upward push in for a long time has traders pricing in a once unthinkable 75 basis point charge increase on the Fed's Monetary Policy Assembly on Wednesday, and issues are growing that the significant financial institution won't be capable of tame purchaser expenses without tipping the financial system right into a recession. Some strategists, but, aren't convinced that the elements are in region to mark the end of the declines. This isn't necessarily what a bottom seems like, said Mark Hackett, leader of funding studies at Nationwide. It is possibly what a bottoming system seems like. Graphic. S&P 500 bear markets in view that 1946. The S&P 500 on Tuesday ended down 22.1% from its Jan 3 document top. The average decline for Endure markets in view that 1946 has been 32.7%, in line with funding research organization CFRA, which may additionally recommend the modern slide may additionally have more room to run. Similarly, the average undergo marketplace has lasted 389 calendar days from the peak to the bottom, extra than 2 times as long as the modern-day undergo slide. Hackett and different marketplace participants also are watching a number of technical symptoms indicating that selling in stocks may additionally have reached a crescendo. One of the more well-known indicators is the SIBO Volatility Index, or VIX, that's known as Wall Street's worry gauge, and measures the expectation of stock market volatility as expressed by using options charges. Since 1990, the volatility index has reached an average stage of 37 at market bottoms, and spiked to 85 for the duration of the marketplace's coronavirus-fueled swoon of March 2020. By comparison, the VIX rose to 35.05 during Monday's sell-off, above its long-term median of about 18, however nevertheless underneath top ranges in other undergo markets. It appears like traders are less panicked and greater resigned to the truth that the next 612 months is going to be a slog and accelerated volatility is right here to stay longer, wrote Chris Murphy, co-head of spin-off method at Susquehanna International Group, commenting on VIX contracts going out into the next year. Graphic. VIX and Endure markets 20 image p. C 201,655,235,253,967.png. Still, extent on puts, which investors use to shield their portfolios from inventory declines, hit 2.03 million contracts on Monday, the highest level for the reason that Fed 28, 2020, consistent with trade alert statistics. Some additionally watch indicators on investor sentiment, with the hopes of probably swooping into the markets whilst pessimism is high and promoting is becoming exhausted. Many such indicators display sentiment has soured. The modern weekly survey of the American Association of Individual Investors, for example, located bearish sentiment at 46.9%, topping its long-time common of 30.5%, however nonetheless below tiers from in advance this year. Those readings came before the higher-than-expected inflation studying on Friday that dispatched shares tumbling and could sour investor sentiment in addition. Graphic. Bearish investor sentiment. Investor sentiment has been negative for some time now, and that could be a sign telling us we is probably getting there as a backside, but we aren't quite there but, stated Angelo Corcafas, and funding strategist at Edward Jones. Technical signs apart, Corcafas said it'll be hard for the marketplace to absolutely bottom till investors are confident inflation has ebbed, permitting the Fed to ease back on its monetary tightening. Others, however, are urging traders to consciousness at the long term. Keith Lerner, co-chief investment officer at Truist Advisory Services, notes that much less than 5% of S&P 500 stocks are trading above their 50-day moving average. That's only happened 9 instances because 1990, and the S&P 500 turned into up in every single case 12 months later, with a mean advantage of 23%. Given the market is already pricing in an excessive opportunity of recession, that shares are very oversold on several metrics, that valuations, at the same time as now not cheap, have been reset, and sentiment is depressed, we'd no longer lessen equities, he wrote in a Tuesday file.